Hey guys, welcome back to the channel. If you're new, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate it. So again, no face of me today. We're going to get these videos kind of rolling out. So before I get started, number one, I wanted to thank you all so much for 18,000 subscribers. Look at this, like amazing guys. Without you, there is no me. So thank you so much. Again, I'm not a financial advisor. I'm not a fiduciary. I don't have a fancy channel. I'm not a guru and I don't want to be, but rather my channel is really geared around my husband and I's journey, which is regular average investors trying to increase our income, trying to build wealth. And again, guys, I can't thank you enough for 18,000 subscribers. Also, guys, please be aware of spam, WhatsApp, fake Facebook pages, etc. All of my vital, important, official information is always down below. When in doubt, send me an email, mommytradertube@gmail.com. But I want to get this video out. I want to make sure it's no longer than 10 minutes, but we're going to talk about Realty Income today. Now, I have Realty Income pulled up here in our Robinhood portfolio. Now, we do own Realty Income elsewhere, but again, this is just for Robinhood. And I want you guys to see down here that Realty Income is not doing the best right now, right? Sometimes your investments are not doing the greatest, right? And I want to make sure I make these videos because sometimes, you know, when everything is going up, sometimes you may feel like your good, solid investments are not doing well. And look, we have 200 shares here in this particular portfolio. Now, as much as we love Realty Income, we also love other things as well. We love SCHD, VTI, we love QILD, we love DGRO. But again, like I said, sometimes your investments are not always going to go up. And you can see we have 200 shares in this particular Robinhood portfolio. And the reason why I love this Robinhood portfolio is because this is going to be the first account that we're going to start to withdraw from when we are ready to retire early. So again, guys, when you are investing, why are you investing? Like, what is the end game for all of this? And so Robinhood is going to be the first portfolio that we're going to withdraw from. So I like to keep a close eye on this. So again, our average cost is $60.86. You can see we're down. Look, we're down about, let's just say 10%, about $1,200. Again, we're down because of the interest rate. So the reason why I love Realty Income is that, number one, I like to own some individual stocks. Now, in our 401ks, Roths, HSAs, those are mostly funds, right? Growth, etc. But there are some companies where I really would prefer to own them outright, right? Because if you're in an ETF, you do not own those securities outright. That's very, very important for you guys to understand. But you know, like Microsoft, Nvidia, Google, Amazon, these are certain companies we like to own outright, and Realty Income is one of those. So our market value is about, let's just say 11,000. We're down about 1,200, but as soon as those interest rates turn around, Realty Income, I believe, will be back up. I love Realty Income a lot. This is their website, okay? So again, I'm not a financial advisor. Don't blindly follow me, okay? I say this often because I'll get these questions a lot, like, what should I buy? What should I buy? No. You have to find securities that you believe in and research them. This is why I bring up these sites, because you can research and, you know, then you can make that decision, because this is your portfolio. Like this portfolio right here is my husband's and I, right? This is in our name. So it's important that we believe in this, even when Realty Income is not doing the best right now. Okay. So going back to Realty Income's website, and I'll have this link below if you guys want to look at it. But again, this helps me to stay the course even when it's not doing the best. So Realty Income right here, basically a simple blurb about what it is. It's the monthly dividend company, okay? That's what they're known as, the monthly dividend company, okay? They are an S&P 500 company and a member of the S&P 500 Dividend Aristocrats. So again, over 25 years, Realty Income has been paying out their dividend, okay? And look at this. I want you guys to look at this right here. I love this because look at this. The company has declared 643 consecutive common stock monthly dividends throughout its 55. Now, I'm not even 55. I'm 39 years old, guys. I'll be 40 later this year. It's been increasing it throughout its 55-year operating history and increased the dividend 123 years. So 23 times, I'm sorry. So it didn't just, continue to pay it, but they increased it. And this is key here. So again, though the market is down, though, the interest rates are kind of going crazy, as soon as the interest rates, kind of go, stabilize out and the Fed actually follows through with their word, guess what's going to happen? Realty Income is going to go back up. And I said the market's stabilizing down. I mean, the market has been doing pretty good. Well, the Magnificent Seven has been doing pretty good. It's been carrying all of the market. But this is the CEO right here. Again, so you can see who it is. You can see some of the returns. Again, it's not doing the best right now. I mean, look, we're down about $1,200. The market is open, so this number will change. But long term, we really, really do like Realty Income. It's my favorite monthly dividend stock. Though I do love other stocks as well. Don't get me wrong. We don't just buy, one or two or three things. We diversify our portfolios. But again, I wanted to show you guys some of their featured clients while I was on this site. So yeah, you can see down here, like they're getting into the casino business. I mean, how many of you guys go to casinos? Now, I do not go to casinos. I think I've been to one once, but a lot of people do like to go to them. And, I feel like, well, if people like to go, then that's an opportunity to invest in that industry. But I want to come down here. You can see some of the industries. So they're mostly in grocery stores, convenience stores, dollar stores, drug stores, home improvement, restaurants, quick service, casual dining, automotive, health and fitness, and general merchandise. Okay. And you can see down here some of their top 20 clients. So the reason why I love Realty Income is because not only do they pay every month, and because I understand how the company operate, I like also their clients. So Walgreens, how many of you go there? This is cold and flu season. How many of you have been to Walgreens or to CVS, right? What about the Dollar Tree? Are there any Dollar Tree people here? Well, guess what? Dollar Tree does not own the buildings that they operate in. It's companies like Realty Income. So this is why I like to be a direct owner in certain stocks, like I said, in Google and Nvidia, which is doing great right now, but also Realty Income as well. But like I said, most of our portfolios are in some type of funds like SCHD, VTI, QILD, JEPI, JEPQ, etc. But individual stocks, I do love some of them, and Realty Income is one of my favorites. So like I said, look at this. It just changed back to 11,000. Again, you just never know how the market will operate. But again, I do like buying Realty Income because of how the company is ran. Because again, this is going to be the first portfolio we're going to withdraw money from when we're ready to live on all of this dividend income that we're all talking about every single week. Let's see how Realty Income has been doing the past day. All right, so not too bad, up a cent the past week, down the past month, down and again. And I think this is because people were starting to get unsure about if the Fed was going to actually decrease the interest rates. But anyway, I like the company and long term, we're going to be with them. And you can see the past 3 months, they're up about 11%. Year to date, down 5%. The past year, they've been getting beat up because, again, every time the Fed increased those interest rates, Realty Income's in the real estate sector, so they get beat up. People who are buying homes, they're paying a lot more in interest. So it sucks. But again, long term, if I come out to max, they're up over 400%. So it's about really staying the course in whatever you believe in. That's key here. Not what I believe in. You have to actually believe in the securities that you are buying. We also have Stag. That's another REIT that we own. Let me bring this up. Here it is, Stag right here. We have 35 shares, about $1,300 invested, about $35.48 is the average cost. And, we're doing pretty good. You can see right here, the past, day, it's up about, doing good. Past week, you can see past month, down about 3% again because the interest rates. But look at this, the past 3 months, you can see the year to date is down about 5%. Past year, past 5 years, and then max up almost 200%. So again, that's what I'm looking at when I'm looking at how to structure these portfolios so that we can actually start to live on this money when we're ready. So again, and yes, I get the question, Should we do covered calls? No, I'm not doing any type of options or anything like that. It's not something I'm comfortable with, and I honestly don't feel like I need to. It's not always about just making more money, but rather being comfortable and really just kind of letting our assets work for us. So again, guys, I hope that you enjoyed the video. I will make sure I have Realty Income's website down below. Again, guys, thank you so much for 18,000 subscribers. Seriously, I really, really do appreciate it. Please make sure you like, share, and subscribe. Let's get to 20,000 subscribers. Again, thank you so much. And until next time, I'll see y'all in the next one. Bye-bye.